97.83 CAD. That is the number you need to be staring at right now. Bank of Nova Scotia, ticker symbol BNS on the TSX, is currently trading at $97.83, up exactly $1.80 or 1.87% on the intraday session. If you are looking at the New York Stock Exchange listing, you are seeing a similar bullish push. But let's be very clear about what is happening on the Toronto floor at this exact second. We are not just seeing a standard earnings beat pop. We are witnessing a fundamental repricing of one of Canada's most misunderstood financial institutions. The market is currently digesting the Q4 2025 earnings report released this morning, and the volume profiles are telling a story that is significantly different from the boring dividend payer narrative you might have heard for the last decade. The tape is moving fast, and the ask size at $98 is thinning out rapidly, suggesting we might see a test of psychological resistance levels before the closing bell. Here is the expectation that most retail investors have when they look at the Bank of Nova Scotia. They expect a sluggish, yield-heavy stock that lags behind its peers like Royal Bank or TD because of its heavy, often volatile exposure to Latin America. They expect a stock you buy, hold, for the 6% yield and ignore while you wait for the quarterly check. That is the expectation. But here is the reality that is playing out on the charts today. Scotiabank has effectively transformed its business model over the last 24 months, and the market is finally waking up to the fact that the Latin American discount is evaporating. The reality is that today's move to 97.83 is not just about a single quarter of good numbers. It is a validation of the massive strategic pivot the bank undertook to exit slower growth regions like Colombia and Panama to refocus capital on the North American corridor. You are not buying a stagnant utility anymore. You are buying a revitalized growth engine that just beat analyst estimates with an adjusted EPS of $1.93 against an expected $1.84. That is a massive beat in the banking world, and it explains why the institutional money is flooding in right now. Let's analyze the immediate market action we are seeing today. The stock opened at 96.95, dipped briefly to find support, and has been grinding higher on sustained buying pressure. What is fascinating is the volume. We are seeing elevated activity not just from the usual high-frequency trading algorithms, but from block trades that suggest pension funds and asset managers are reweighting BNS in their portfolios. If you are watching the order flow on your Interactive Brokers trading screen, you will notice that the bid-ask spread is tightening, a classic sign of high liquidity and strong conviction from buyers. Speaking of Interactive Brokers platform users, many sophisticated traders who utilize Interactive Brokers fee structures to margin their trades are likely leveraging up on this move, sensing that the breakout above $97 is a technical gateway to new highs. This isn't just a retail frenzy like we sometimes see with Tesla stock or Nvidia stock during a hype cycle. This is systematic accumulation. The Interactive Brokers account holders who track Interactive Brokers stock trading volumes know that when a Canadian bank breaks a multi-year resistance on earnings volume, the trend often has legs that last for weeks, not just days. But why is this happening now? To understand the magnitude of today's 1.87% move, you have to look at the macro picture that has been suffocating Canadian banks for years. The fear of a housing collapse and the fear of emerging market currency devaluations have kept BNS trading at a discount. However, looking at the data released today, the provision for credit losses, or PCLs, came in at $1.1 billion. While that sounds like a lot of money, it is actually stabilizing. The market was pricing in a disaster scenario where mortgage defaults would skyrocket, but the reality is the Canadian consumer has been far more resilient than the bears predicted. This variance between the disaster expectation and the stable reality is where the profit is being made today. It's the same psychology that drives activity in Apple stock when iPhone sales beat low expectations. When the worst-case scenario is taken off the table, the stock has nowhere to go but up. Now, I want you to take a second and think about your own portfolio. If you are using Robinhood stock trading to manage your positions, you might be seeing BNS pop up on your daily movers list. Robinhood app users often overlook Canadian banks because they're not as flashy as tech. But if you are holding Robinhood investments in the financial sector, this is the kind of stability combined with momentum that you should be paying attention to. Even if you were just using Robinhood cash management or dabbling in Robinhood fractional shares, owning a piece of a bank that has paid dividends since 1833 is a foundational move. And for those of you who trade Robinhood crypto, you know that volatility cuts both ways. Sometimes it's nice to have a boring bank stock that suddenly decides to act like a growth stock to balance out your risk. Let's dig deeper into the earnings report that triggered this. The headline number was the EPS beat, but the real story is in the international banking segment. For years, this was the drag. Today, the bank reported that its strategic exit from non-core markets in the Pacific Alliance is nearly complete, and the remaining international operations, primarily in Mexico and the Caribbean, are showing robust margin expansion. This is crucial. They're not just in Latin America anymore, they are targeted. They are focusing on the trade flow between Mexico, the U.S., and Canada. This is the North American corridor strategy that CEO Scott Thompson pitched, and today's price action is the report card saying it worked. If you are a client of Fidelity Investments, you might have read the research notes on Fidelity brokerage portals. Fidelity Wealth Management advisors have been cautious on BNS for a long time, suggesting clients stick to Fidelity mutual funds or Fidelity ETFs that track the broader index rather than stock-picking BNS. But today's news might change the tune on Fidelity trading discussions. Whether you use the Fidelity mobile app or have Fidelity IRAs for your retirement, seeing a legacy bank execute a turnaround of this magnitude is a signal to reevaluate your sector allocation. We also need to talk about the wealth management arm. Scotiabank's global wealth management earnings were up 17% year over year. This is a massive growth driver that often gets ignored. As markets have rallied in 2025, fee-based income has surged. This isn't just about lending money for houses, it's about managing money for the wealthy. If you use SoFi Invest or SoFi Active Investing, you know the appeal of fintech and digital wealth management. Scotiabank has been aggressively modernizing its tech stack to compete with SoFi Investing and other SoFi robo-advisor services. They are capturing a younger demographic that would typically flock to SoFi stocks or SoFi ETFs by offering hybrid advice models. The growth in this segment proves that the big banks can still compete with the SoFi trading platform disruptors if they invest heavily in technology, which BNS has done. Let's pause on the technicals for a moment. At 97.83, BNS is approaching its 52-week high of roughly $99. If we break 100, we are in blue sky territory. The relative strength index on the daily chart is heating up, sitting around 68, which is bullish but approaching overbought. However, in a breakout scenario driven by fundamentals, stocks can stay overbought for a long time. The Moving Average Convergence Divergence, or MACD, just posted a bullish crossover on the daily time frame. For those of you who invest online using investing sites with advanced charting tools, pull up the weekly chart. You will see a massive cup and handle formation that has been building since 2022. The cup was the long decline and stabilization during the interest rate hikes, and the handle was the consolidation we saw earlier this year. Today's 1.87% move is the breakout from that handle. This is textbook technical analysis validating fundamental news. Now, I want you to think about the future. What is your price target for BNS by the end of 2025? Is it $100 or are you more cautious? Also, let me know, do you think the exit from markets like Colombia was a smart move, or did they give up on high growth potential too early? I read every comment, so drop your thoughts down there. Now, let's pivot to the company itself for those who are new to this ticker. The Bank of Nova Scotia is Canada's third-largest bank by deposits. It is often called Canada's international bank, though as we've discussed, that moniker is changing to Canada's North American bank. Its business is divided into four main pillars: Canadian banking, international banking, global wealth management, and global banking and markets. The Canadian banking arm is the fortress. It provides the steady cash flow through mortgages, credit cards, and commercial loans. It is the boring engine that powers the dividends. But the Global Banking and Markets division is the Ferrari. This division handles corporate lending, investment banking, and capital markets. In today's earnings, this division posted earnings of $1.92 billion, up 30% year over year. That is staggering. It reflects a resurgence in deal-making, IPOs, and corporate financing as the economy